Did you know that according to Cathie Wood, this will change everything for Tesla stock? Tesla as a company is known to make innovative changes. Stay tuned and keep watching to find out how these innovations will bring changes to Tesla stock. While not all changes can be deemed good, Tesla is known to constantly make innovations to better its products and services. Despite the rocks thrown at the company, Tesla continuously strives to provide better services and products to their customers. Today, you will find out what Cathie Wood meant when she said this will change everything for Tesla stock. Most other auto manufacturers, unless they want to lose money on the cars, most are not going to be able to keep up with or to reach Tesla's combination. So that's very important from a performance point of view and a range point of view, says Cathie Wood. Forbes described Cathie Wood as an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invest in innovations like self-driving cars and genomics. Cathie Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. Wood is also known to provide monthly updates about several things like monetary and economic policies, innovations, what can be expected in her field of expertise, and comments on the Fed's decisions. The Federal Reserve System, commonly known as the Fed, is the central bank of the U.S. which regulates the U.S. monetary and financial system. When asked about her thoughts on Tesla in 5 years, Wood said that compared to other auto manufacturers, Tesla definitely has an edge. She said that if one analyzes cars not by brand but on range and power combination instead, Tesla is the best pick among them all. Still, she said that most famous car brands like Volkswagen and BMW have done wonders in the last few years. It is just that Tesla is way ahead of them in terms of range and power combination. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on the cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty, but I think as consumers start to shift from gas-powered to electric and look at the specs of the different cars," says Wood. She said that although they might still be persuaded by brands only, they won't have as good an electric vehicle as Tesla will provide. Wood said that they have been studying the CapEx schedules for traditional automakers against Tesla. She said that in the next year or so, Tesla is going to spend more on electric vehicles if it is not already. Wood said that 5 years ago, most people were saying Tesla doesn't even have a shot to exist and that it is more likely to go bankrupt. But now, the company is spewing out cash and spending as aggressively as it can to roll out new plans, and Wood believes that Tesla will announce another one before the end of the year. That said, Wood is hugely bullish on EVs and bullish about Tesla. ARK Invest's latest stock model pegs Tesla to be worth a whopping $4,600 per share by 2026, as earlier mentioned, up about 560% from today. We just published a report with our long-term forecast, and the numbers have gone up dramatically, and yet we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed in the last couple of reports, says Cathie Wood in an interview. According to Cathie Wood, one of their bull cases for Tesla in the old model was that it would lose 1/3 of the market share it had in 2018, which is 17% global market share, including China, that it would lose as the EV company's competitors came into the market. However, the share increased to 18% in the past year. Wood said that they are failing on the battery technology front as they are not riding down the consumer electronic cost curve which Tesla decided to run down. Wood explained that Tesla uses a lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. Thus, if companies decide to compete with Tesla, they'll have to sell every electric vehicle at a loss, and at the same time, they're losing their internal combustion engine business. Wood said that the reason why Tesla is so far ahead of its competitors is that those companies have just gotten started. She said that what they have delivered so far are cars that don't even meet the range or other metrics of Tesla's Model S. ARK Invest CEO said that there are 3 other advantages Tesla has. The first is batteries. Second, they have their own artificial intelligence chip. Wood said that when their analyst James Wang, who worked at NVIDIA, an artificial intelligence company, for 8 years, looked at the specs of Tesla's chip, he was in awe. Wang said that Tesla is 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. This is important in going autonomous with electric, which is Tesla's goal. Going autonomous has everything to do with artificial intelligence projects, and the winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, only has 20 million. Finally, Tesla's advantage over other companies is that it is the only auto manufacturer still that delivers over-the-air software updates to modify performance. According to Cathie Wood-led firm ARK Invest, Tesla's robotaxi business should account for 62% of its enterprise value and more than half of expected earnings before interest, taxes, depreciation, and amortization (EBITDA) in 2026. Regarding the company's revenue, the electric vehicle business is expected to comprise 57% of Tesla's total revenues in 2026, while the robotaxi business will make up 34%. Assuming a worst-case scenario in 2026 in which 10 million units are sold, the company would have generated $374 billion in revenues and have a share price of $2,900, with a market cap of $3.3 trillion, reflecting a compound annual growth ratio (CAGR) of 24%. Considering a bullish scenario in which 17 million units are sold in 2026, $513 billion in revenue would be generated, and Tesla's share price would be $5,800 with a market cap of $6.7 trillion. That would include a CAGR of 42%. This is probably why Cathie Wood sees a 560% upside in this stock. How do you see Tesla stock in the long term? Share your thoughts in the comments section below. Among Tesla's innovative changes is Tesla's GigaPress. Sandy Monroe, an automotive engineer who specializes in machine tools and manufacturing, said that the GigaPress beats out standard stamping when making a brand new product and is going to make more than 100,000 units of the vehicle per year. He noted that the break-even point for the GigaPress will probably be north of 100,000 vehicles before it is a benefit financially. Then it's gonna really shine. It'll beat the pants off of a stamped and welded carriage. Lower platform, Monroe said. He explained that the GigaPress with tooling will cost much less than a stamped product made from steel. Moreover, Tesla's world-renowned Gigafactory is supposed to solve the company's battery crisis. The lithium-ion manufacturing plant, with a footprint of more than 1.5 million square feet, aims to help ramp production to more than 500,000 Tesla cars annually. Musk has even hinted that the company may need several facilities like the Gigafactory to meet demand. Wood is particularly impressed with the way Tesla addressed problems that arose because of the COVID-19 pandemic. During the pandemic, when all other companies and manufacturers have been struggling with chip shortages and supply chain bottlenecks, Tesla pivoted between suppliers by rewriting its software just so the factories and plants won't stop running. More than that, Tesla has opened 2 new manufacturing facilities in Austin and Berlin. These new plants aim to increase production along with the Shanghai and Fremont factories. These developments can most possibly mean an increase in operating margins and scale to manufacture vehicles. The opening of Berlin and Austin allowed them to achieve higher gross margins. This shows how the leading EV company continued to flourish despite the numerous roadblocks, and this proves that Tesla defied odds and has a great potential to succeed more. In a video Cathie Wood previously made, she said that innovation solves problems and that adopting innovative strategies may be a way to lower costs and sustain margins. Visit our channel and watch our other videos for more Tesla stock content.